could argue banks are the culprit, but it's not just banks. The market at large has taken a bit of a breather today. Remember in the morning we were saying it's very difficult to envisage that people will go with very large leverage positions into this non-farm payroll data, because if it's adverse, the US markets could have a very strong reaction and thereby cause some bit of flutters in the global markets as well. So believe this is it. If indeed the non-farm payroll data is benign from a market's perspective, then you might well see a bit of a reversal on this. There are also some other factors. I mean, there's so much of chatter around a message that has come in from one of the ministers about what's happening in the neighboring countries, or for that matter, some adjustments that have to happen from the FPI side. So 3 or 4 rumors floating around really. One of them might be true as well, who knows. But the point being, there's a bit of a scare, which I reckon might get bought into as well very, very shortly. Maybe starting Monday, if indeed the global markets look okay. But it's been a precipitous fall in the session today, particularly for the Nifty banks. Broader markets, very quickly, let's just pull up the mid caps and the small caps and see what they are also doing in the session today. About a third of 1.3% lower for the mid cap space and about 1% for the small cap space as well. No prizes for guessing that the breath is weak. Let's get the heat map up on the screen. A lot of red, very little green with a 1.32% downtick. Asian Paints, Bajaj Finance, LTI, Mindtree, some bit of brokerage flavor. Otherwise, no pattern there, because it's not that there is a group of stocks which is leading higher, but there is a group of stocks which has come off, and that group is called everything, but banks in particular, with an SBI down because of that brokerage note, or an ICICI Bank which is also looking weak in the session today. IT like Infosys, HCL Tech, etc. have also looked weak. So Tamanna, safe to say, no place to hide in the session today. Just that it's not a brutal knockdown. It is about 1%. You could expect 2-3% gashes in any bull market, no matter how strong this is.
I agree with you on everything except the word brutal.
It's not brutal.
It's brutal because of the ferocity with which it's come in the closing session. The whole day wasn't this bad. Is this the simple point that I would make? So just look at the introduction. Yeah, I mean, I would say post-afternoon it's gotten a little painful.
Yeah.
It's gotten a little painful. And yes, I mean, if your non-farm payroll data comes in benign, like you said, it should not be that bad. My question is that it's also showing that the dependence on global news flow is increasing right now. I just want to pull up the VIX before we get to specific stocks and, of course, what is up and down on the broader indices. And this is also giving you a sense of the nervousness. The India VIX, I mean, again, nothing earth-shattering, but still about 8% up now and rising. So there is a bit of, I would say, nervousness in the market. Let's pull up sectoral indices just very quickly to give you a sense of whether there is any place to hide right now in the kind of pain we're seeing, and nothing is in the green except the India VIX, which is not that great either. The PSU banks hit the most. We'll come into detail on why. State Bank of India leads that pack. We have an interview today with C.S. Sethi, the chairman, and that is also something that you should watch out for. Crude worries are continuing as well. So that's the broad picture. Let's just pull up the gainers and losers on the S&P 500. I think that would be the BSE 500. I think that would be best to look at, because very specific news flows. On the losing side, I mean, this whole story with Vodafone Idea. This morning we were talking about the Goldman Sachs report on Vodafone. Were they being too bearish when they talked about a 2 rupee 50 paisa target price, and in fact that's a better target price than what they had earlier? Well, clearly we weren't sure if the market would react a lot. Clearly it has. Vodafone Idea pummeled today in trade. Easy Trip is the other one. It was up yesterday and a sharp uptick when it announced that it is now going to venture into manufacturing electric buses. I suppose the question Niraj and I have been asking is why? And maybe that's a question the market's asking as well. A bit on the auto anch part also is looking tough for Uno Minda. Oil India is another one with crude impact coming in. On the upside, Godfrey Philip, because of the bonus issue, SBI Cards responding to notes once again. So brokerage notes, a big part of the story. And then you have a few pockets of an upswing here and there. But really, broadly, this is no longer just a market about stock-specific news, one would reckon, Niraj. This is a broader kind of sell-off. The question is, where is the opportunity?
Well, is the opportunity a few points lower? And is that the case? Or is it something else? Are there sectoral things which could do well? You should keep IT at the back of your mind, viewers. We are closer to the Fed rate cut cycle than we were last week or last month. Kunal Rambia, founder of The Street, Vijay Chopra, MD and CEO, Enoch Ventures, to talk about all of this and more. And remember, a bunch of our research team will be here through the rest of the show to talk about some of the highest flying stocks as well. Gentlemen, both of you, good afternoon. Thanks so much for joining in. It's been a while. Kunal, how are you looking at trade this afternoon? Is this worrying you, or would you believe it is closer to supports, respecting supports, and may get bought into if the world markets stay calm tonight?
Good afternoon, Niraj bhai. Good afternoon to all our viewers. So if you look at the Nifty overall formation, right, from the extreme lows of June, which we saw somewhere on 4th of June, so far the trend is absolutely intact. And if you ask me about the trend of the Nifty yesterday, I would have said it's the risk reward ratio is very much unfavorable. So I'll be cautious at that point in time. But at the today's level, which is at around 24,800, I think I'll be absolutely comfortable going ahead with buying the dip. To the extent Nifty sustains about 24,750. I think this dip can easily be bought into, and stock-specific movements can definitely play a big role from here on. So yeah, this correction seems to be a buying opportunity as of now.
But what would you buy? Kunal, good afternoon. Vijay, good afternoon to you too. My question to you, Kunal, is buy what? Would it be some of the stocks which have really taken a beating? So for example, SBI. Let me start with SBI, also the stock of the day. Look at the kind of hit SBI has taken, and we'll get that report on what Goldman Sachs is saying on SBI in a bit. But a behemoth like SBI falling 4% really pulls down not just the PSU banking index, but the whole space as well. Would you come in and buy at 785?
So good afternoon. Again, if you look at the SBI chart from April 24 to so far, the counter was just holding up the levels of 800 somehow. But there was not much of a momentum. But at the same time, if you look at the recent behavior of market, I think chemical segment is doing pretty good. So rather than looking at the counters which are falling as of now, I'll look at those counters which are showing good momentum even in the present market. So yeah, those stock-specific movements might just continue. SBI at 785, I'll be a bit cautious at this level because it has broken the major support of 795. But by any chance, if 795 is again reclaimed in a day or two, then considering today's low as a stop loss, one can certainly initiate a buy.
Okay. Before we get Kunal's ideas, Vijay Chopra, you look at mix of fundamentals and technicals. Are you as confident, or are you circumspect about the levels? For, let's say, the very short term, Vijay, I'm not talking about 1 month, 2 months out. The next 1-2 weeks.
Niraj, I'm absolutely the wrong person to talk about short term. I think
you do look at charts, so I thought you would have some sense of or some thoughts around that. No?
Yeah, I do look at charts, and I've been talking about the froth. I've been talking about high beta, and shifting from high beta to low beta. So this I've been yelling at the top of my voice in some months now. Definitely, markets when they correct, I think that this would make the markets healthier. If there is no major global turmoil, so to say, I don't think that we're going to have a major correction, so to say. But yes, 3-4% correction is what is required also. It makes, the market sane. And we have seen insanity, in a lot of sectors and a lot of stocks. So I would say that, these corrections would make market much more attractive. And there are sectors, there are companies which are good. I think that mid-cap IT as a sector looks good. We have seen, if you ask me my choice, Tata Tech seemingly is very good. I think oil and gas sector would give you a good opportunity to enter. Stocks like Chennai Petro, stocks like IOC. These stocks are good to enter post the correction. I think that this would, because I was looking at the PCR right now, it is 0.6 Nifty and 0.6 for Bank Nifty as well. So clearly, it is coming towards the oversold zone. So markets might bounce back. Number two, very, very important point. This nervousness is also due to the impending Fed meeting wherein, we all are expecting that some kind of a rate cut would happen. Globally, people are expecting. Even Fed has said, given this guidance. So possibly, if Fed starts cutting rates, we'll see that in India as well. And that would cheer the markets, beyond even our imagination. So I would say that why to jump and, do BTST and stuff like that? Just don't jump and buy. wait on the sidelines if you have cash. And if at all you've bought good companies, so don't worry at all. Even if you see a correction in SBI, that doesn't make SBI a bad company. So stay invested. And if at all, if it comes around say 740, 750, SBI is a great buy at these levels, so average. So I would say that no need to panic. I don't see any panic in the markets. But yes, these corrections were impending, and we were waiting. I was personally waiting for some kind of a correction to enter into good stocks. But there are good opportunities, I suppose. So in the housing finance space, I see opportunities, because if the interest rates come down, the interest rate sensitives would do well. Similarly,
which ones, Vijay, in housing finance?
If you ask me, LIC housing finance is my choice right now.
Okay. LIC Housing Finance is your choice. Just a little bit more detail on SBI for our viewers on what's happened today with the stock. So there's a Goldman Sachs note out on SBI, which has downgraded the stock to sell with a target price of 742 rupees. So what they go on to say, what Goldman Sachs goes on to say actually, is that the risk-reward profile is turning unfavorable. Headwinds to ROA sustainability, return on assets that is, and they expect a sub 1% ROA by FY26. They go on to say that lower loan growth has given a widening gap between deposits and loans. They expect the increase in credit costs from MSME, agri, unsecured loans. They've also cut their earning per share estimate by 3 to 9%, and the target multiple to 1x from 1.2x earlier. Now, we spoke with the SBI Chairman C.S. Setty, and my colleague Vishwanath and I had an exclusive conversation with him. And among other things, he also talked about how the bank would not be chasing deposit growth. Listen in.
One thing what at the management level we decided, and even the board level we have decided, that our growth will not come at any cost. If I said in some context also that if I'm fighting for deposits or competing for deposits, I would compete on non-rate war. I don't want to get into the rate contest. Yeah. I would like to improve the service quality, and our customer base is huge, and some of them probably not happy with some of the services. How do we bring them back? We have identified the whole universe of our customers who are the promoters, who are promoting our services. Their SBI is good, you please bank with SBI. And then we have stagnant customers. That means, they have an account but have not been transacting. We would like to reach out to them and ask them what makes you to come back. And there are attritors, they're leaving. Some of them probably are leaving for some reason. We would like to find out, what are those reasons which are making them to leave. In the sense that our effort would be to fight on non-rate, contest, not on the rate war. Okay. So is the case with on the credit. When you talk about credit, the credit growth we would like to do without compromising on underwriting standards. I think this is something which we hard fought and established very, very strong underwriting standards today. And there is no way we can compromise on that. And even if the book grows a little slower, it's fine with us.
All right. That's not the only financial, though, that is in focus today. I think aside of SBI, which we just spoke about, and the Goldman Sachs view that Tamanna just spoke about, there is also Bajaj Finance, which, of course, has lost a bit of its luster relative to how it was trading in the morning. But Harsh Johnson, to highlight what's the Jefferies view, albeit some of the other views as well, because a clutch of reports that have come out, Harsh. What stood out as a commonality between those reports, and what does Jefferies have to say?
Well, Jefferies in particular, Niraj, met with management. What they are suggesting is default rates have come off for Bajaj Finance, which is a key positive because credit costs have been a slight bit of concern, especially where the street is suggesting. Now, from an overall perspective, what does this do, and when do we start to, or when can we expect this to start reflecting on numbers? First off, Q2, they've started to see a taper with regard to default rates. Q3 onwards, they're expecting credit costs to start to fall, which is a key positive. with regard to profitability. So they believe profits again will see a better number from H2 FY25 on the back of this particular metric, which is credit costs. They are also giving or ascribing a 4.5 times price to book September 26 price to book valuation on this. They've hiked their target price from sub 8,000 to 8,410 rupees a share. So clear positive, nearly a 15%, almost a 16% plus upside on this one from Jefferies.
Okay, thank you for that, Harsh. So that entire group in focus, and of course the Bajaj Housing Finance IPO also in focus because the anchor book opens today. In fact, I had the opportunity to speak with Chairman Sanjeev Bajaj, who talks about how he was overwhelmed with the kind of response they saw in the IPO, at least from the anchor investors. He's also talked about the regulations which are coming into the industry and saying that regulatory challenges are always welcome. Regulatory risks still remain, and we've seen them in the past as well in various arenas, and some with Bajaj Finance as well, and then you've gone back to the drawing board and fixed things which needed to be fixed. Just in the space right now, how big a concern is regulatory risk?
I would not call it regulatory risk. Regulatory risk is when overall regulations change, you get blindsided and don't have enough time to comply with it. So, for example, in the last 10 years, regulations for NBFCs have got tighter and closer to banks, at least the large NBFCs. You could call that regulatory risk. In our case, as I said, we never looked at arbitraging on that, so it did not impact us. It may have impacted others. But yes, what we are seeing is that the regulator, their scrutiny on the large NBFCs, including HFCs, has increased. We think this only strengthens the entire ecosystem. And we look at it proactively and positively. As we are growing, we're getting larger, we're getting more important to the entire lending ecosystem. There is a greater responsibility to ensure that we minimize any fallout of unintended lack of controls, missing controls. As we are growing, that by itself should not be a reason for fault lines to appear. And while we don't live in a perfect world, we understand that. But we are very conscious to proactively ensure that our foundations get stronger and stronger as we are building out our business. Once in a while, gaps do happen. The regulators, through their inspection, identifies that, asks us to correct it, and we go ahead and do that. But our intent is how can we keep proactively evaluating and improving ourselves so that theoretically we don't need the regulator to come and tell us that there are gaps. I think it has just made us much stronger as a set of businesses. And some of that pain is a pain that you have to endure as you're getting bigger and better, because none of us are perfect. So there will be gaps. But how quickly you address those gaps and how positively you take that is what differentiates the better companies from the rest.
Okay. All right. Let me just get a view on Bajaj Finance from Kunal Rambia first. On the charts, Kunal.
So now again, let's just go back and check out the January 2024 highs. The counter was somewhere near to 7,400, and from there we saw the extreme bottoms near to 6,500 levels. And it's been almost 6 to 7 months. This counter is within that consolidation itself. Just once, that was specifically on 2nd September, it gave a closing above 7,400, but again it slipped below that level. So until this counter gives a decisive closing with a follow-through buying above 7,400, I think this range of 900 points can be taken as an opportunity by the traders. Buy near 6,500 and think of selling near 7,400. So for now, it's a clear sell on this counter with a stop loss of 7,400. The first target can be 7,000. Keep trailing the stop loss and keep trailing in this trading in this range till the time the counter gives a closing above 7,400.
Okay. And Kunal, what are your ideas for this afternoon? It's a tough day to maybe give long calls, but I'm interested to see if you have long calls.
Yeah, Niraj bhai, certainly I do have all the wrong calls. The only reason being, again, the counters which are near the support in this consolidation correction, I'm finding the buying opportunities. The first is Ramki Infra. Look at the counter, it's trading near to 702. It's been almost 3 months. The counter is consistently making bottoms near 695 itself. And the high is near to 725, 730. So with the stop loss of 690, one can initiate a buy on Ramki Infra and the target can be 725. The second counter is IOC. The only reason being this IOC, yesterday you look at the high, the counter made a high near to 185, 186 levels. Right now available right near the support itself, so it can be bought into, this correction can be bought into. The stop loss on this can be 172 and the target can be 185, which is the yesterday's high itself. And the third is a positional trade which I'm sharing, and that's Apollo Tyres. Now this counter, if you look at the historical data, from 2022 so far, consistently there is a perfect trend line, 45-degree trend line, which it is respecting so far. So with the stop loss of 485, one can think of initiating a positional trade on this. And the target for this entire series of September can be 535 to 540. So these are three trading ideas plus positional ideas.
Okay, interesting. A tire company wouldn't surprise me with the kind of cuts that crude is taking as well, a bit of a sentimental positive. But before we get back to a set of stocks which have lost out, Vijay, I want to ask you about what's happening with a Gujarat fluoro if you track it. 12% higher yesterday, 7% higher today. There is talk of maybe some fundraise in a subsidiary level. But chemical stocks aren't exactly setting, from a business-wise, doing that well. Any idea about Gujarat Fluorochem? Do you track it?
Well, I do, and I think on a couple of channels I've also recommended it. But yes, the stock has come up, considerably up in the last 2-3 sessions. But again, I would say that no point of jumping and buying right now. And if at all you have a position at a lower level, exit it. So I would say that if you're getting 37, 3800, it's better to exit here. And wait for, buy an FCL, buy a Finotex chemical, if you want to stay in the chemical space. So it's a better play. I would say if you, as crude is falling, buy a Kanza and Nerolac. So, that would be a good buy at these levels. Although there are very, few companies I'm looking at right now for buying. But I think, yes, booking profits is also an important part of the, market and bull market especially.
Okay. All right. So let me come to another stock which is in focus, which is Vodafone Idea, completely cracking after Goldman Sachs has maintained a sell rating with a revised target. Their revised target has actually not moved too much, but their target is 2.5 rupees. Which was 83% down from the current market price this morning. Of course, the stock now 11% down. Rucha is talking to us about this. Rucha, I think one of the things that is concerning Goldman Sachs is the market share of Vodafone versus its peers, isn't it?
Yes, you're right, Tamanna. So market share is one of the problems which it is looking at. Goldman Sachs has, as you rightly mentioned, revised its target price, and now the target price stands at 2.5 rupees, implying a downside of around 83% from yesterday's close, and the stock is down about 13% in trade today. But moving on to the market share problem, the Goldman Sachs believes that Vodafone Idea will lose around 2 to 3% of its market share in the next 3 to 4 years. Talking about the current market share based on FY24 revenue, Vodafone stands at 17%, Bharti Airtel stands at around 38%, and Jio stands at 43%. So Jio is the largest player in terms of market share. Another problem which Vodafone Idea is expected to face is the cash flow problem. Now, Vodafone Idea is expected to pay the AGR and spectrum dues to government starting from FY26, and hence the brokerage house believes that Vodafone will remain will have a negative cash flow at least until FY31. Another problem is the capital expenditure problem. Now, talking about capital expenditure for the telecom sector as a whole, there is a direct correlation between the amount of capital expenditure these guys undertake and the market share that these telecom companies gain. So even if we assume that the government will convert the current debt to equity, Vodafone Idea will be able to afford capital expenditure which is 60% less than its peers like Bharti Airtel and Reliance Jio, and hence this would not convert into the market share, and therefore the problem of declining market share will continue, is what the brokerage house believes. Now, talking about ARPU, that is average revenue per user. Now, even if Vodafone wants to maintain a cash flow neutral stance, that is not even positive cash flow, neither a negative cash flow, flow. ARPU, which is expected to be in, should be in the range of 200 to 270 rupees versus the current levels of 146 rupees. Now, just to give you a context about the ARPU, Bharti Airtel's ARPU stands at around 211 rupees, and that for Jio stands at around 182 rupees. So, Vodafone Idea is clearly lagging in terms of ARPU, and again, as I mentioned, even for it to maintain a cash flow neutral stance, its ARPU should come at around 200 to 270 rupees. So, cash flow problems, ARPU problem, market share problem, and capital expenditure problem is why the brokerage house has downgraded the stock, implying a 83% of downside.
Thanks, Rucha, for that. But Rucha, while you're with us, and quickly, just before we get to Nishchal Maheshwari, is waiting by. But very quickly, since we're on the topic of telecom, Indus Tower 2 is sulking today. I believe a brokerage note not that constructive.
Right. Indus Towers. So now we have Goldman Sachs on Indus Towers. It has downgraded the stock to sell, and clearly the stock is down about 4% in trade today. Target price is set at 350 rupees, implying a downside of about 20% from yesterday's close. Now, the main concern behind this is, though the fundamentals for the company seems to be strong enough, the brokerage house believes that the re-rating has been overdone, and the current market price is already reflecting the strong fundamentals even for the next 2 to 3 years. Therefore, this concludes that there is limited visibility for the share price to move up. Also, it believes that the current share implies 8 to 10% of EBITDA growth by FY30, which is highly unlikely, is what the brokerage house mentions. So, concluding all of this, the negative catalysts include that the multiples are at a significant premium to Bharti or Reliance Jio, which are the peers for Indus Towers. Vodafone will continue in terms of eroding its share, and hence this will result in a negative catalyst for Indus Towers, and a reduction in Bharti Airtel's tenancy rollout is also expected by Goldman Sachs. But just quickly a brief up on what CLSA believes on Indus Towers. Well, CLSA is completely bullish on this one. It has maintained the outperform rating with a target price of 575 and upside of 36%. So a clearly different perspective is what CLSA is highlighting over here.
Right.
The positive catalysts include reduction.
Sure, Rusha, but that different perspective is not something that investors have seen today. It's a very clear perspective, and stock, of course, down 4.5%. In the broader context, maybe not the worst thing today, and Indus Towers not the biggest loser. The overall market mood is a little bit of an issue today, and Nishchal Maheshwari is joining us now, market expert on the phone line. Mr. Maheshwari, a very good afternoon, and thank you so much for speaking with us today on the show. When, I think the street is wondering what's next. Do you think it's just simply the weight of this one data point which could change the mood, or is there a deeper concern there?
Good afternoon. Thanks for having me on the show. Yes, I think this is now getting accumulated. This is not just one data point basically which has come out yesterday, but I think there's been several of them basically over a period of time where we are seeing this data points getting accumulated. So unemployment data, before that basically the 10-year, 2-year yields, basically the inverted curve on the interest rate side. That is now becoming positive. So we are seeing all these signs on the US side that I think market is still factoring in that there is going to be a soft landing in US, but these indicators are actually giving you a sign saying that the US is headed into a recession. And I think market is not factoring in that, and that's why this kind of nervousness.
Just follow up on that, Nishchal. This recession boogie in the US has not been played out for the first time. We saw it nearly 12 months ago. It completely dissipated, and it's back again. Is it really a short-term sort of perception issue, or is there a real concern there in your view?
I think this time the concern is very much real, basically, because last two times when this bogey was there about a possible recession in the US, the consumption was pretty strong in the market. Consumption was very strong in the economy. But this time we are seeing weakening consumption in the US itself. And on top of that, basically, when you are this unemployment number, if you remember during that time, it used to be very, very static at 3.5, 3.6 after 500 basis point of increase in the interest rates. The first time we are seeing basically it has crossed 4.2, 4.3 now, and it is headed upwards. So I think this is a serious concern. Historically, we have seen in 2001 and 2007 and 2013, whenever interest rate cuts started happening, basically in a short period of time, you were headed for a recession in the U.S. So at this time, the concern seems to be pretty strong.
Nishal, good afternoon. Niraj here. So you reckon that the fears of a recession and the effects of that, if it were to happen, of course, would far outweigh the optimism or positivity from a rate easing cycle?
Niraj, we have to understand basically why this rate easing is happening.
Of course.
So rate easing is basically definitely a concern of the economy going into a downward spiral, and that's why you are decreasing the rate, and you are trying to maybe thinking that jumpstart the economy. But if you look at it, Fed has several times said that any rate hike or increase, basically the effect of it on the economy takes 3 to 4 months. So you have increased 500 basis points, and now you're going to be cutting it over a period of time. So the impact of that cut is going to come through into the economy over a period of time. So first, economy will keep on going down, and thereafter it's going to, whenever the impact happens, then maybe it'll jumpstart. But I think at least for the next 6 months, you are going to have a weaker economy in the U.S. The only thing is market is not factoring in a recession as yet, and that's why I think there is going to be a surprise.
Nishal, for those who are looking at in the Indian markets right now, this sell-off as an opportunity, because for the last several weeks, the conversation has been with those with money on the sidelines that we want an opportunity to come in. Is this that opportunity?
I would be very basically of this sell-off as an opportunity. I think wait for it. In the previous sell-offs, we have always seen that the U.S. has been pretty strong. This time, I think it is being led by the U.S. and that's why I would be cautious. Secondly, I think the valuations are not cheap. So I think this time you should be cautious basically and wait it out.
And what is the sort of most vulnerable sectors you're seeing right now? Today's story is clearly PSU banks, but do you see that as continuing?
So I wouldn't be looking at any particular sector. I would say basically any stocks which are very high Ps, irrational exuberance, and this is spread across all sectors. So if you really look at it, basically the only sectors which have not been participant to that is FMCG, banking. These are the only two sectors which I see basically which do not have overwhelming exuberance. Every other sector seems to be having overwhelming exuberance and overwhelming expectations. So I think all these things, they need to correct.
There was a long overdue correction which was required, and that's perhaps part of what we're seeing right now. Thank you so much, Nishal Maheshwari, speaking with you. Always a pleasure. We'll take a very quick break at this point. We're coming back on the other side and talking about oil companies, upstream oil companies also having a pretty tough day, and we get you some strategy ideas for Monday. Stay tuned for more. All right, painful afternoon is one way to describe it. Actually, Nifty below the 24,900 mark now, very strictly and firmly below that mark, down about 1.5%. Yes, if you look at it in the broader context, it's less than 1.5% fall. The Sensex over 1,000 points down, so that's definitely painful. Sectors-wise, PSU banks hurting the most, and when you have an SBI cracking, then the rest are sure to follow. Barely any spots of green, VIX up about 8%. But the question is that what is the kind of strategy you can have in a market like this? Vijay Chopra, let's talk a bit about some sectors which are looking interesting. Is FMCG now a defensive play you want to look at all? Pharma, a defensive play? Are you going to go back to those kind of areas?
First of all, not right now. I hope you remember the day when you said that, are you excited about Cochin Shipyard? And I said, yes, I am excited about the sector. But yes, there is too much of steam right now. It's heated up. So, all these defense plays, they corrected quite a bit. So what I want to tell you is, markets seemingly, I was listening to the gentleman who was saying that there would be an impending, slowdown or in US. But I don't think that, if the overall situation remains same, the kind of flows which we are having in the mutual funds, they are reasonably okay. I don't think that Indian markets are going to crash anytime soon. But yes, there would be corrections on the way up. I think that 3-4-5% of correction is going to make the markets healthy. But yes, as I said earlier, there are pockets where you can start looking at. I'm not saying buying, but look at a company like Chennai Petro. As I said earlier, also it trades at a price to earning of 5, owned by Indian Oil Corporation, government of Iran, and is into the oil and gas space. And as crude falls down, we are going to see some kind of profits pouring in. So it's available at a price which I think is really good. As I said earlier, mid cap IT seemingly looks good. Pharmaceuticals, very few players. I think that they have run up quite a bit. So very few players in pharma right now. I don't have any. I think that housing finance companies, leading with LIC housing, I think should do well once the interest rates start coming down. I think Geofin is one good play, which we can look at with a longer term perspective. The kind of backing it has from the global players and the kind of vision they have. I don't know about the strategy they are going to come up with, but definitely it's going to be a force to reckon with, because this is what Reliance does. They come and they conquer. So they are going to come up with some things which they are going to ensure that they have a reasonably large market share in no time. So these are few things and companies I'm looking at right now. So just wait for this dust to settle down, and only then there would be further buying recommendations. So it's not always good to trade. It's always good to sit on the sidelines and sit on cash at times.
Okay, well, but so many oil and gas companies have been spoken about. Upstream oil companies have cracked in trade today with prices near 9-month lows. Now Mihika joins in to talk about and at a point of time when oil has come off, there are brokerages who are still expressing confidence in some of these. Morgan Stanley note today, I believe, was constructive on oil upstream as well. Mihika talks about the upstream space in particular, and Mihika, does the math completely change with US crude below $70 a barrel?
It actually does. Oil India hit an intraday low of 4.5%, ONGC an intraday low of 2.47%, and this is a negative trajectory in terms of price for these counters that we've seen all week. Now, this is mainly because oil prices are hovering around the $72 to $73 per barrel range, which is at a 9-month low. They slipped below the $75 per barrel mark for the first time in 9 months this week. And this bearish price trajectory in terms of oil prices is mainly because on demand concerns from top oil importers and consumers like China and the US. Now, when you talk about the impact on oil prices, lower oil prices are negative for upstream companies like ONGC and oil exploration as they explore, produce and then sell oil. Now, sales realizations were already capped at $75 per barrel because of the government's windfall taxes. So when Brent prices are lower than that, also there's more earnings risk for these companies, as now they'll have to sell. They can't be selling it at higher than market prices. But however, like you pointed out, the outlook still remains unchanged. ONGC still remains Morgan Stanley's top pick. They've noted top quartile dividend growth, improved production outlook and return on capital employed, as well as recovering cash flows to drive ONGC's re-rating going forward. As well as Oil India, they've said that Oil India offers doubling and tripling of the most profitable fuel refinery in Asia. They also have 38 years of hydrocarbon reserve life left in terms of their assets, and their operation cash flows are growing with a history of good dividend payouts. And even with all of this growth, the company is still trading at single-digit multiples.
Okay. Thank you for that, Mehika, but stay on with us. We're going to talk to you about one more company. Before that, just a quick word on the oil and gas sector. Kunal Rambia, let me come to you first. So crude has been a complete seesaw kind of story fundamentally for the last few days, and global factors there. But on the charts, is there anything that you're liking, at least in the downstream play, or you'll stay away for now?
It's always safe to stay away just because the counters are near to the support. I'll just wait for a one uptick. But at the same time, just look at the ONGC chart. The counter was somewhere near to 305 in July. It made the same bottom somewhere in August. And again, today it made a low at around 303, 304. If someone is absolutely comfortable taking a chance, then this counter is well poised right now. I think with the stop loss of 302, one can initiate a buy. Sideways consolidation is not a worry because the trend still remains positive. So with the stop loss of 302, I think one can initiate a buy, and the targets can be 325, 330. This is a very short-term view. Overall trend in almost all the counters remains strong as of now.
And Premier Energies is the other one that Mehika is covering this afternoon. It's charged up in an otherwise weak market. The stock has zoomed nearly 30% since its listing in the last 4 days. Mehika, what's driving the stock?
Yeah. Multiple factors actually. It's up 18% today on the back of an 215 crore order win. But one of the main things that I feel like it's important to highlight is the supply squeeze of shares. Now currently, Premier Energies has a total outstanding number of shares of over 45 crores, but only 11.32% of this shareholding is free in the market and is allowed to be traded. Shares have the rest of the shares have in locked-in periods ranging between September 2024 to August 2027. We do have two expirations of lock-in periods in 2024, however, on September 29th and November 29th, where 2.1% of equity will be unlocked and allowed to trade. But it's also key to know the deliveries, which stand at 84%. This means that out of the total liquid shares currently in the market, around 84% of buyers are holding on to the counter. And when you talk about other drivers, first of all, the company is the only listed pure play integrated solar module as well as solar cell manufacturer. And the company's recent order win of 215 crores was for over 8,000 solar water pumping systems at a 5-year warranty period. This adds and brings the total order book of the company to 6,100 crores, where majority of the order book is expected to be completed in the timeline of 18 months. The company is also going to set up and ramp up its capacity by 4 gigawatts each for solar cell and module production. This adds to a market share that the company currently enjoys. And lastly, when you look at the financial growth over the last 3 years, it's seen a turnaround. A net loss in FY22 of 14 crores. Now in FY24, it's posted a net profit of over 230 crores. The margins have also seen a significant improvement. So multiple, stocks, multiple factors driving the stock. But yeah, the supply is still limited.
Okay. Thanks a lot. 8% higher for Premier Energies for sure. And that stock is doing well for itself. Mrs. Bector's is the other one, which has got a QIP and the stock is up 13%, so doing rather okay for itself. Kunal, I've been intrigued by this because the last few weeks maybe, we haven't heard too many of the banking names, the private sector banking names come under conversation from a trade perspective. What's happening with an HDFC, ICICI, Axis Bank?
See, honestly speaking, Niraj, if you look at HDFC Bank, it has not done much in the last 3 to 4 months. It's been in sideways consolidation. But at the same time, just, when our show was on, I just shortlisted one counter, and that's Axis Bank. Now, those viewers who understand bit of chartings, just have a look at the bottom of 2020, where the counter made low of 320, and since then connected today's low itself. It's right onto the support, and it's looking very attractive. This entire trend is just intact, and look at last 15 minutes volume on the counter. It's phenomenal. For the entire day, there was not much of a selling volume, and the buying volume has just happened near the low itself. So with the stop loss of 1140.45, one can go really positional on this counter. The momentum play will emerge probably about 1195 with a target of 1260. But someone who wants to, someone who waited for long to accumulate the counter, this is the bottom where Axis Bank can be bought into. I will not be really keen to buy ICICI because still it's away from the support. Support is somewhere near to 1180. But I think Axis can be played from here, from the present level.
Okay, Axis can be played from here at the present level. So do watch out for Axis Bank as well in the sessions to come, really, if indeed there is a bit of an uptick. The other interesting piece is that while IT saw that leg up, Tamanna, today from the Morgan Stanley note at the start of the trading day, not enough IT names are in the green. In fact, most of them in the red, save for maybe an LTI Mindtree. Most set of other names are actually down. Most set of stocks, Infi included, are actually trading in the red today. So IT hasn't had a particularly great day today.
Can IT really have a great day when everything is in this kind of a mess is the question, and especially considering that IT stocks are so dependent on global factors and the US news flow. So particularly for IT, I mean, the reverse would be that if you have just superb jobs data coming out today, then the brave heart who bets on IT this afternoon or in the next 10 minutes or so will be the one laughing their way.
Most certainly. I mean, it'll be interesting to see. I know, today, like we said, some of the other conversations are, is there a comment that has come in from one of the ministers around what could happen geopolitically? Is there nervousness around the jobs data, or this whole piece around the FPI beneficiary disclosure deadline today being the last day? And what could that be? Now, I don't know, Tamanna, your view, but my suspicion is that no FPI, which is doing serious business in India, is going to wait till the last day for making their disclosures and risk the licenses or the abilities to that trade or invest getting cancelled. So, yes, it all combines to become a potent cocktail of conversation. But could that be the reason for the markets to fall? I don't know. I find it very, very difficult to digest.
I mean, I don't know which FPIs this would be, which wouldn't have a proper, office in place looking at all of these disclosures and filings. Yeah. And if they are the kind that have waited for the very last minute, then perhaps it's not a bad thing that they're exiting or will.
Yeah, but and known to the markets for the last 6 months that this is going to be the deadline. So really tough to believe that such a reason could be the cause for this.
Yeah, it could be a cocktail of factors, and just a market looking for an opportunity to book profits could definitely be one of them as well. But we're going across to Puneet now, who has put together some data on a news story which actually caught our attention. Remember, Ease My Trip yesterday announced its entry into the electric bus manufacturing market via its new subsidiary, Easy Green Mobility. So the company is investing 200 crores over the next 2 to 3 years and will set up R&D. That's the 200 crores for R&D and setting up a manufacturing plant. My colleague Puneet is tracking the story for more. Puneet, the big question which came to our mind, and we asked the management today, is why are you getting into a space which is so crowded?
Yeah, definitely. And we just thought we'd look at the EV bus market in general, of what the legacy players have been doing. And the headline is that they are also struggling, so as to say, because the margins are not there for the EV bus segment, and that's because of the current payment security mechanism that is there. Now, as you said, 200 crores investment in R&D, they are building a capacity of roughly 4,000 to 5,000 buses by 2027. Half of those will be sold by that time. But just wanted to look at, the EV bus segment, very competitive now. There are three main players to look at: Ashok Leyland, Tata Motors, as well as VECV, which is the Volvo Eicher commercial vehicle division of Eicher Motors. Those are the three big heavyweights there. And then there are two entrants also in the last few years, JBM Auto as well as Olectra Green Tech. Now, when you look at the domestic market share, Ashok Leyland is the leader here with the EV bus segment, roughly around 33% market share with them. Tata Motors is also with a similar market share of about 33%, and the rest of all the players among the three more that are named of Tata Motors as well as the two new entrants of JBM as well as Olectra, own roughly 1/3 of the market. So that's currently the market picture here. And Ashok Leyland is majorly benefit due to the investments in Switch Mobility. They've also started selling those brands here in India as well. Now, when you look at the current payment security mechanism, that's the key concern here, which most players have also raised. Now, orders currently, are given on the basis of the companies only operating those buses for a period of roughly 10 to 12 years. And that's one of the key concerns that the industry has raised. Now, this involves, manufacturing the buses as well as selling them. So just to, helping the viewers understand this, for example, Ashok Leyland, now it sells electric vehicle buses and it has also created a subsidiary called OM Mobility. So essentially it takes the buses it's sold from the Switch or the main company, sells it to the subsidiary, and the subsidiary, of course, is not earning. So they've also infused 300 odd crores in this particular last year as well to buy those buses and keep it in the subsidiary. But do note, this all money is going on within the company. The company is only earning this amount that they're investing over the next 10 to 12 years. And that's one of the key concerns of the industry, because to operationally maintain the buses in different cities, one of the key concerns, because of different government policies where they can't earn the same revenue, but the cost remains fixed. The operational cost of running the vehicle is different in each state as well as each city because of the current charging infrastructure there, and also, the state power problems that we have. So that's currently one of the key issues. Tata Motors CFO he's said that, the OEM should focus on bus making itself. Current order book is also not very encouraging. Ashok Leyland around 1,500 odd buses, as well as Olectra Greentech is the highest with 10,000 buses, and JBM with around 5,000. But we don't know what kind of payment mechanism they have locked in for the 12 years. So there is there's not much visibility on earnings for the next decade or so for these companies. And so Ashok Leyland as well as Tata Motors have been going slow, and VECV has already said that they don't want to enter this business until the payment mechanism is sorted. So there are some government, conversations going on. But yes, another entrant in this very crowded and very complex market is going to be a key thing to watch out for. Back to you.
Maybe hence Easy Trip is down about 6% today after having the 10% uptake, because I think, or maybe you could blame it on the markets as well, but it's the third worst loser after Vodafone and Minda Corp. So that tells you a thing or two about Ease My Trip. Okay, 8 minutes left for the markets to shut shop. It's time to get in closing strategies. Kunal, what is your top closing strategy for the day?
See, Niraj, as we just discussed, I think Axis Bank can be a good play at the present level with the stop loss of 1145. One can go long on this counter. Then the immediate target can be 1190, and above that, targets can be 1225. The second counter, which I like the most, is the SW Solar. Now, this counter was in upper circuit yesterday. Today, when we started our show, I think it was near to 690, and right now it suddenly quickly moved up to 705 and holding up the support really well. So with the stop loss of 690, I think SW Solar can also be bought into, and the targets can be 730 to 745. So these are two counters for now to watch out for next week as well as next entire week. Not just BTST, but for the entire week.
What would you do with Vodafone right now? I mean, that Goldman Sachs report, actually, to put it in context, it's they've improved their target price from what it was before. So Goldman Sachs was never looking at the kind of lofty target prices that maybe some others have given. So 2 rupees 50 paisa was an improvement. But right now, looking at where the stock is after 11% dump, what would you do?
So again, let's look at the weekly chart to understand the trend, because in technicals, we give a lot of importance to trend, right? So the bottom of October 2023, which was 10.5, and after that, April 2024 bottom, which is at 11.90. If you connect these two bottoms, that's right on to today's bottom itself, which is 12.92. So, if someone wants to really play this counter at this point in time, the stop loss is 12.75, which is a bit lower than today's low. One can initiate a buy. I think this trend which we are witnessing on the chart from April 2023 so far is still absolutely intact. And from here, one can initiate a buy. Minimum stop loss and the targets can be 15.5 to 16 kind of levels. I'm not really keen to play this counter right now, but yeah, if someone wants to really go ahead with this risk-reward ratio, I think this counter is well poised.
What about Tata Tech, Kunal? Are you excited about Tata Tech, an outlier today in an otherwise dismal market? So the 3%
Absolutely.
upside is looking good. Would you see a continued bullishness there?
Absolutely. This entire downtrend actually came to an end on 27th of August, where the breakout of this entire down channel was right at 1070. After that, we saw the price going up to 1115, and from there it came back to retesting that breakout zone, which was 11,060. And today it's making a new high. So it's a clear sign of higher top, higher bottom, and emergence of a new trend. This counter can be bought in by any decline. Till the time the counter remains about 1050, I'll definitely remain buyer. So honestly speaking, my first entry was near to 1070 itself. Now I'm waiting for the counter to come near 1095 to accumulate even more. The positional stop loss is 1050 and the target will be 1220 to 1225.
Okay, 1225 is the target. Vijay, are you bullish on Tata Tech?
Well, I said earlier, I named Tata Tech, and I think that a company with a great pedigree and a good business model, good possibility that it will inch up to 1250 and even 1300. So Tata Tech seemingly looks the better ones among the IT pack, and I think then it is a buy at these levels.
Okay. Final question, at least from my end. Vijay, telcos have raised rates. We've spoken about them ad nauseum. Indus Tower, and if I don't think we've spoken about that one, sees some gravity today. Do further corrections open up investment opportunities into Indus?
Well, I think that if at all the stock corrects and we get it around maybe 360, 370, it would be a great level to buy into this stock. So I would wait for another 30, 40 rupees correction, and only then I could recommend a buy. But yes, Indus Tower is a buy in the longer term, but not right now. People who are holding should not panic. They should keep on holding the stock.
Okay. Some other high flyers today, by the way, lest it feel like we're talking only about the Reds. VST Industries is up 19% today on the bonus issue. Godfrey Phillips is up 12% today. I wonder if there is a bit of a tobacco piece out there as well out there. Gujarat Fluoro 8%. Some strength in Galaxy Surfactants in the last few. La Opala, SBI Cars, Narayan Rudalaya, Sumitomo Chemicals, Suven Pharma are some of the others. So there is some bit of green out there on the screen. Before we start wrapping up the show, Kunal, this Gujarat Fluoro has had a big up move in the last couple of days. For somebody who went trading long, would you take money off the table, or is the trend looking strong enough for more?
See, Niraj bhai, again, if you look at the historical data from October 2022 so far, this counter tried crossing 3,900 mark almost 5 to 6 times, but it was a failure. Today's closing on the weekly chart is almost like 20% up in this entire week, and the strength is really very good. So I think this is a time to stay invested. Trail the stop loss to 3,600 and hold the position. Next week, if we see the breakout of 3,900, then I think a new rally from the present level might just emerge, and we might see the levels of 4,300 to 4,400 in the long run. So yeah, I'm very bullish. And if someone is already holding on, I think please hold on. No one can think of initiating buy at this level because of unfavorable risk reward ratio. So if someone is holding, please hold on. Those who have not initiated buy, wait for the next week to start and buy about 3,900.
We leave it at that, gentlemen. Thanks so much for taking the time out, and happy Ganesh Chaturthi to both of you, Michami Tukram as well. And well, just about a minute left for the markets to shut shop. It's not turned out to be a very good day. Nifty is lower, mid caps, small caps lower, maybe a bit contained relative to how we were at the midway through the trading day. And just very quickly get the heat map up on the screen to just show you what stocks have done well. Well, hardly a few. Bajaj Finance though features there, but SBI, ICICI Bank, Reliance, there are some heavyweights out there, Tamanna, which have corrected in trade today.
Yeah, the heavyweights are cracking. A bit of defensive play. Nestle, Britannia, showing some, spots of green, but nothing major beyond that. I wonder if you can quickly pull up the advanced decline ratio just to show you the sort of bearishness of the market breadth today. And yeah, that's widened as we've gone into close as well. So almost a 1:3 kind of a ratio. And even in the sectors, we pulled up the sectors for you in a bit. And if you're seeing SBI at the bottom of the list on the Nifty, there's no surprise there because PSU banks have been hurting. VIX has come off though, and at least you could say that on the key indices, the heat has come off in the last few minutes or so. We'll pull up the top gainers and losers on the broader markets, the BSE 500, and just give you a sense there what's happening. I mean, to put it simply, it's mostly, stock either reports or news-related movement. Vodafone Idea hurting because of the Goldman Sachs report, down about 11%, but remember it was down 14% at one point, so a bit of a recovery even from there. Easy Trip, maybe the electric bus plan is not working that well. On the upside, bonus issue, VST Industries. The same actually for Godfrey Phillips as well. Bonus issue there as well. So some of those stories. SBI Cards, I believe, also because of a brokerage report. Gujarat Fluoro, Niraj, is something that you highlighted as well. I think going into next week, it's all going to be about what the data tonight from the US says. So can't really take a call right now. What you need to do is tune in on Monday morning to see exactly what that picture looks like. But for now, from Niraj, me and the entire team that put the show together, thank you so much for watching.
And wishing everybody, Tamanna, a very happy Ganesh Chaturthi.
Yes.
As well as to all our Jain viewers and friends, Michami Dukram.